There are growing calls for the federal government to lower spending and boost productivity in a bid to grow the economy. Just a day after the former Reserve Bank governor lashed the government, business leaders are weighing in. Senior reporter Matt Taylor joins us live. Matt, the former RBA boss Philip Lowe isn't alone in his calls to boost productivity.
He's not, Kieran, and he's really leading the charge. Of course, he was the head of the central bank from 2016 to 2023, and he's really calling for the government to boost productivity, to free up capacity and boost capacity in the Australian economy. Now, he was speaking to the Financial Review. Let's give you a look at some of the comments that he had to make, saying that productivity capacity of the economy is not growing very quickly, and the government wants to keep spending and wants to keep offering people handouts, which adds to demand, which in the normal course of events would be fine. But if the supply is not growing, so if the size of the economy, the capacity of the economy isn't growing, you can do it, you can't do it, and if you do try and do it, then it means interest rates are going to have to go up because the economy is being a little bit hot out there. Now, these comments coming after wages data out yesterday showed that real wages growth had stalled, and we heard from the new Shadow Treasurer Tim Wilson a little bit earlier on Sky News, really calling for the government once again to rein in government spending.
The government is the key driver of inflation in Australia right now. Jim Chalmers is in denial about the demand he is creating, and he is the primary cause of the inflation bonfire that we have, and his only answer is to pour debt petrol on it.
Asked how the coalition would try and boost productivity, Tim Wilson said he'd approach it from a startup perspective rather than a big business point of view. Take a listen to some of how he plans to look at boosting productivity out there.
Small and family business and the self-employed will be central to our policy agenda, because I want to think more like a startup, less like a big business. We need challenges in the market. They're the ones who are going to create the new economic opportunity and the growth that the Australian economy desperately needs, and we'll get unconventional thinking from them.
Now, in quite extraordinary comments, the Treasurer hitting back at what the former RBA Governor Philip Lowe had to say. He was asked about this yesterday. Here's some of what he had to say.
I respect Phil Lowe. He's become a bit of a critic of the government since he wasn't reappointed to that role. I wish him well, genuinely. And on the substance of the issues that he's raised, I've answered that in detail.
And these were echoed by his Assistant Treasurer, Kieran, just speaking to you in the last 30 minutes or so. A bit of a fiery exchange, which we have there. He's also not really buying into what the former RBA Governor had to say.
I respectfully disagree with Philip Lowe's assessment of government spending. As I mentioned earlier, when the RBA statement came out last month, they pointed to private demand as the key driver. And if you look at government spending over the last 4 years, the trajectory of our fiscal position is over $230 billion better than the trajectory we inherited. That's the biggest nominal turnaround in Australian history.
You're a well-credentialed economist. And he's saying, Governor Lowe, career at the RBA, respected central banker, and you've been respectful. Yes, the Treasurer questions as to whether he was yesterday when he called him a persistent critic. But can I say to you, does the government need to go further?
Look, the bit of Philip Lowe's commentary that I agree with is that we need to lift productivity growth rates. We need to lift the speed limit of our economy.
And we're also hearing some other voices weighing in on this as well. The CEO of the National Australia Bank, take a look at some of the comments that he's had to make about boosting productivity as well, saying that the fact is, without productivity, Australia simply can't grow any faster than it is today. So how we're living now in 2026 is frankly as good as it gets unless we lift productivity. This is peak Australia. So, Kieran, lots of voices weighing in on this one when it comes to productivity and really growing the size of the pie so that demand has somewhere to go, essentially, in the economy.